Hey, good afternoon, everybody. Today's focus is going to be on insurance. We've already looked at our home, we've looked at our auto. Now we've got to protect our assets a little bit. And in doing so, we get something called insurance. Insurance is the plan we have to help us in case we have unexpected costs. As we talked about in some classes yesterday, if a tornado strikes, or if there's flooding, or if you're in a car accident, or your health goes bad for something, or even if it's just to get annual physicals and checkups. We have insurance. It helps you. You pay a little bit as you go, so in case a big expenditure comes along, you can handle it. Well, the four main types of insurance we're going to look at in our class this year in our life economics class: home insurance, auto insurance, life insurance, and the big one that everyone's talking about today in politics is health insurance. A couple terms we have to know before we can get into our insurance too much. The first one is premium. Premium is the annual yearly cost of insurance, how much you pay every year for insurance. If my premium was $1,200, I would have to figure in my budget $100 a month to pay for my insurance, whatever kind of insurance I had. A premium is just the total cost for your insurance. The other term we discussed somewhat in class yesterday is deductible. The deductible is the money that comes out of your own pocket before the insurance kicks in. If you have a small fender bender and it's going to cost you $50 to get your fender roughed back out of your car, well, the insurance is going to pay for that. You don't have to pay that $50. That is your deductible. Once your deductible is met for health insurance, usually the insurance company will pay. In your auto insurance, you may have to pay that first $100 every time something goes wrong. Well, let's look at an example of what might happen when you need insurance. The Weisenheimer family is in a car accident. Uh-oh. The car has lots of damage, and Mr. Weisenheimer has broken his leg. He'll be in a cast for a while. Well, they take the car, look at it, it's going to cost $7,500 to fix the car, and the hospital bills for his broken leg with x-rays and everything come up to $15,000. That's $22,500 the Weisenheimers has to come up with. That's exactly why we have insurance. Not many of us can reach into our wallets or go to the bank and just take $22,000 out and say, here you go, everybody, we're good now. You go to the insurance, you fill out the paperwork, and the insurance will help kick in. In the insurance plan that he has, Mr. Weisenheimer is covered for both health and auto. His deductible for the car is $500. His health deductible is $1,000. Because he has the insurance, he'll pay his $1,500 instead of $22,500. The insurance that he pays for every month has come on and saved him $21,000. There is a benefit to being insured. How much the insurance company charges you for your premiums and your deductibles are determined by several factors. One of the ones we talked about in class yesterday is age. You, being younger and in the simulation, 23 to 28 years old, are going to pay more than someone who's much more experienced as far as it comes to auto insurance. What is your history? Same thing with autos. If you have a history of speeding down the street, if you have a history of getting tickets or you've been in more accidents, you will pay more for insurance. Family or single coverage in your health insurance plan. Before I was married, my health insurance cost a lot less because it was just me. Once I got married, it cost more. Add in kids, even more. Now the insurance company is covering all four of my family members instead of just me. And of course, always how much coverage you want. If you want to cover everything, it's going to cost more than if you just want certain things covered. I'm not going to go into details yet on that because you're going to go to the web page here in a second and look at some of the different.
Brady Johnson to the office, please. Brady Johnson.
You're going to look at that as soon as Brady goes to the office. The key concept of the day. I want you to know this one. This will be on the test. The more you are willing to pay in deductible, the lower your premium will be. If you look at the insurance company and say, I will have a large deductible, I'll take a $2,000 deductible, the insurance company goes, oh, good. That means we don't have to pay for the little things. You'll pay for those yourself. They're going to give you a lower premium. Now, if I go to the auto insurance company and I say I only want to pay $500 deductible, they may make my premium $5,000. But if I'm willing to have a $2,000 deductible, they may lower it to $2,000. Right? Again, the more you're willing to pay in your deductible, the lower the premium will be. Now, what I'd like you to do, go to my website. Look at all the insurance links that are out there. Just play around with them, look it out. If you can find your insurance costs, add them to your budget that you've started to create. And then we'll end the class today in the last 10 minutes talking about insurance and some of the things you found out. And tomorrow we'll probably add life insurance as well. So that being said, go to the insurance page. Look around here, average home insurance by state. You can find here, you'll find Wisconsin. Wisconsin is good on number 23. The average person in Wisconsin pays $644
To the office, please. Michaela Anderson.
for their home insurance. So now if you were to take that and divide that by 12, you'd have your monthly cost for homeowners insurance. Then go through the new car insurance, find Wisconsin, find the average auto. Again, we'll talk about life tomorrow, and last one will be medical as well. So try and fill in as much as you can today. Other than that, get at it, look around. It's okay to talk to your neighbor about what you're doing, but find those prices if you can. And we'll talk to you in about 15, 20 minutes.